Is Mark Carney going after our pension? Carney's high-profile climate advocacy and fear of a green tilt in CPP. As UN Special Envoy on Climate Action and Finance and former Bank of England governor, Carney has repeatedly warned that investors must break the tragedy of the horizon by pricing in climate risk and shifting capital toward net zero solutions. That record leads some to worry he'll steer CPP Investments aggressively into green assets, rather than leave allocations purely to market returns. Removal of the 30% ownership cap and worry about politicization. In the 2024 Fall Economic Statement, the federal government signaled it will eliminate the rule that limits any single pension fund to 30% of a Canadian company's voting shares. Critics fear that lifting this safeguard could let political actors or their appointees exert undue influence over large domestic corporations via pension fund stakes. Brookfield's $50 billion Maple Fund discussions and opacity around private deals. Private market initiatives, like Brookfield's talks to raise $36 billion from pensions plus $10 billion of federal support, happen under non-public NDAs. That lack of transparency can look to some like slush fund behavior, even though it's simply the nature of closed-door institutional fundraising. Carney and other past critiques of CPPIB's transparency and fees. CPPIB has faced public criticism for not disclosing enough detail on its climate exposures, private market fees, or board member compensation levels. Those debates over fossil fuel divestment feed narratives that the board may be hiding large off-book commitments or redirects of pension capital. Fears that Carney will invest CPP into green investments. In 2024, Ottawa convened a panel, chaired by ex-PBO Stephen Poloz, to study how CPP might do more to boost domestic growth. Even a consultative exercise can spark worries that experts will recommend policy-driven allocations rather than pure fiduciary mandate decisions. We won't have CPP for long. Large-scale budget announcements, for example venture capital incentives, AI funding, sometimes get conflated with CPP assets. Without clear labeling, some observers mistakenly count these federal programs as direct draws on pension balances. Carney should do more to educate the public on the differences for transparency's sake and to quell rumors from developing into future negative campaign ads. Broader distrust in elites and institutions. Populist sentiment and low institutional trust make any change to a highly valued social program like CPP feel ominous. Once the pension theft frame takes hold on social media, it's very hard to dispel, even in the absence of real evidence. Carney does not have long before the people of Canada judge him for his actions. Will he save the country, or will he be what ends it?